G'day traders, Stacey Burke from Stacey Burke Trading today, talking about how I look for pairs that are in play. So one of the things that I look at with the instruments that I'm trading, and again I've primarily focused on gold, NASDAQ, and oil, and at very specific times of day, and the idea behind that is to keep me out of the market. Most of my mistakes, bad habits, all of those things happen outside of my window of time, and there's certain behaviors that these markets exhibit over and over again based on timing, high and low of the day. And then also there are days when instruments may not move much and they may not fit the profile that you think they're supposed to. And today I'm just going to talk about how to recognize pairs that are potentially in play in that day or in that session coming up. So, which pairs are in play? So one of the things that I identify with specifically is that the number box itself is the consolidation. We'll look at that in a second. So those 25 pip boxes on most of the major pairs to me acts as the consolidation zone. And so that being the case, we can look at the previous session, the previous night session, the US session, whatever that may be. If you're trading Asia, London or New York, the market will be in a consolidation. It might be near major round numbers. It might be inside of a quarter level, on top of major round numbers, underneath major round numbers. But those instruments will vary in the size of their box. But most of the major pairs will be in the 25 pip range. Oil, gold, NASDAQ, of course, can have a lot more volatility. Their box may actually be a 100 pip box in terms of the amount of movement that it starts off with each and every day in Asia. But typically they'll start off in a 25 pip box and they'll expand the range from there. And we'll look at that again in a second. So again, you're looking at behaviors where the market may break out, pull back. It might be in a trading range, or it might exhibit false break reversal type behavior. You can observe peak formations, especially at major round numbers. And again, we'll look at that, and that can help you form a thesis for a session for the high or low of the day trade setups. And again, it may also give you an idea in terms of what's a reasonable expectation in terms of risk and profit target. So again, major round numbers, high and low of the day, and of course, in terms of this breakout pullback, I'm referring to trend trades. And currencies may trade better in their individual sessions. So for example, the New Zealand dollar may trade better in the Asian session and in the US session. Now that's not to say that it may not have a peak formation, high week, low week opportunity in London. But generally speaking, Aussie dollar may trade well in Asia, whereas the euro may not. The euro might trade better specifically at the London Open. And again, we'll look at that. Oil seems to trade, and the NASDAQ seem to trade in all three sessions. Gold can move in any session, but typically the US session may be the largest range, depending on how, again, if you're at the high or low of the week. Those are different types of markets, but the currencies themselves may exhibit individual behavior that's more specific to a session. So again, the pound may trade better in London. So what do I mean exactly by in play? What I'm looking for is something that has moved 25 to 50 pips outside of that initial consolidation. Now, it doesn't necessarily have to go that far, but again, we'll look at the major pairs. I want to see a breakout of a consolidation box, a 25 pip increment box. So on the major pairs, it may only go 10 to 15 pips outside of the range. Oil and gold could go 150 pips outside of the range. But I want to see a breakout of the initial trading range to show me that there's activity in that instrument. So we could look at the euro on any given day, any pair. We'll just scroll through some different pairs. I have the 1 minute chart purely for the specific intention of looking at the price action as the day begins. And so we have a consolidation that ends the day inside of 25 and 0. As the new day begins, we break above 25 into the beginning of the Asian session. And the market pulls back and we have a potential high of the day in place at this stage of the Asian session. They come back a second time. So for traders who ask, how do you know the high of the day or low of the day is locked in? I don't know, but when they revisit it at the timing window, and if there's an opportunity, there may be a sell high opportunity. We get the engulfment at the high of the day after it's broken out of the initial consolidation that ended the previous session for a sell high opportunity. So this market, again, I refer to this pin as the pump and dump setup. It shows up everywhere. Now, I typically wouldn't be looking at the euro in Asia, but this is a great example of a day just randomly selected that there was activity right off the bat. The market broke outside of the initial 25 pip box consolidation for a 25 pip plus sell high opportunity. Now, the fact that this market has moved early in the day outside of that consolidation tells you there may be an opportunity later. And so the market comes down to the bottom of that 25 pip consolidation and proceeds to trade off of the double zeros, the previous day's low, and pulls back up inside and layers on top of the lower highs. So again, coming into our next session, we may have the low of the day locked in. We've already broken out of the initial consolidation, so our highs, our short stops, our breakout traders are going to be positioned above that quarter level, and our first target for a trade, if we have a buy low opportunity in the Europe window, would potentially maybe be up at that 50 level, gauging the strength of that trade. So you may have scaled in position. Your first take profit may be at the high of the day, and you may hold because this market has taken off at the London Open for an extension of that move, potentially for 50 to end at the 50 level, or to continue to hold that to see how it handles each 25 pip increment box. So again, the market broke out, it came to life right away, it came back down. This coming to life initially shows us that this pair may be in play on the day. So we won't walk through each opportunity that presented, but again, coming back to the consolidation, they exceeded the 75 pip increment level, meaning, again, there are potential short stops above there, breakout trades, whatever. They came down below 50 and pulled back and put in a higher low of the day, possibly. Now, when traders ask, do you consider the session low, the high low? When the new day starts and my low of the day is down here, London puts in a higher low. London opened up, traded down into the low and went higher. That is the new low of the day for London. Then in the gap, they come back into the London close, or the end of the London window, put a low in place at the beginning of the U.S. session, back above 50. So they've broken out of the consolidation box above 75. They've broken down below that consolidation box below 50. Pulled back. So again, now our consolidation is between 50 and 75. Then they proceed to go down to the low of the day, and we can zoom in. You can go and look at these on your own charts. But again, we get the engulfment and the shortened W pin hammer for the low of the day trade setup in the U.S. session, if this is a pair that you're looking at. And it again comes back inside of the 50 pip box and trades back towards the high of the day. We start the new day again. And this pair is between 50 and 25. And initially in Asia, we get a breakout of that consolidation box. So again, I'm just looking at where the price action is. It's between 25 and 50. And so they come down pre-market, they put a little W in place, they break above the initial high of the day. In Asia, they break out, they pull back, creeping trend back down to the higher low for a reversal back up through 50. So I'm not saying that you would have traded this, but you may come to this in London or in the Europe window, and this pair is in play. It's already moved 50 pips, 25 outside of the Asian range. It puts a new high of the day in place, and this is a great example of the session opens up in Europe. does not take out the high of the day. The first thing usually an equity market will do is head to one of the extremes. We have an initial low put in below that 25 pip box. So again, when the session opens, we're between 75 and double zeros. You'll notice the highs are in the lower part of the box. Creeping trend down. They create a low in the Europe session, come back and go up and break structure right at the open of London. They get traders selling the engulfment down into the low. Engulfment 1, 2, 3, pin hammer at the low of the session for an explosive move from the quarter level up through the double zeros. So each session, the market will be in a consolidation based on the behavior of that price action, and whether or not it's been in play earlier in the day can give us some real insight if we're looking for a buy low, whether that's buy low of the day in that particular session or a sell high of the day, high of the session opportunity. Bang, there's 25 plus pretty fast, and you can take profits and lock it in. We head into the next window into the U.S. session. The market has 3 pushes up, came back below the zeros, put in a peak formation, traded back up to that in the gap time. So again, forming a thesis heading into the session, we may be trading back into these peak formations without looking to the right just yet for a sell opportunity. They're getting you to buy into the peak formation. We're between 75 and double zeros. We have profitable traders in the market from the explosive London Open trade. We have a higher low, it's actually a lower low after we've rolled this over, so we've broken structure. They get you to buy into the high before we get the engulfment and the pin hammer right near the end of the first hour for 20 to 25 back down to where the move began. So they tried to break out of the consolidation. We know this pair has been in play because it's been moving all day. They hit the double zeros, engulf, pin hammer for a return back down to the 25 pip box. So again, the next day we head into the session, and as we trade in Asia, this pair has stayed fairly dormant, fairly sideways. We stay in between 75 and 50. Later in the session, it breaks back up to the high of the Asian session, just above the 25 pip box, for breaking higher for a possible sell high opportunity. We're at the high of the day, just above the 25 pip consolidation. We know we have higher lows in the gap time that are fuel for hitting stops. And of course, we have the low of the day of the Asian session, which can act as a basement or a sell profit-taking area. The market takes out the higher lows before creeping down at the end of the London hour. So we break above the box, they sell high, come back down to the low of the Asian session. They lock in the low before pulling back and bursting back through the quarter level back to the high of the day. So initially, no real strong indication of movement, but they break the high. They give a sell high opportunity at the Europe-London window. Creeping trend down, 3 pushes. They lock in the low. Engulfment, break in structure, engulfment, pin hammer for the burst back to the high of the day, up to the double zeros. We get up to the double zeros, the market pulls back inside. This is in our gap time. The gap time breaks out and puts in a new high of the day. They trade up to that at the next quarter level. So again, they've broken through the consolidation and put a potential low in place during the gap time, locking in our double zeros as a potential consolidation box. But we see the market break down through there in the U.S. session window. So we get our 25 pip extension of the range outside of that high of the day opportunity. The market pulls back into the peak formation in the New York window. We'll just follow this across. Pulls back and they lock in the double zeros as a consolidation area for a vertical move back through the high of the day. Creeping trend down into the open. We know this pair is in play. We can see now, obviously, as the range expanded, we are targeting anything in that 50 pip box. The next target, of course, is up towards the double zeros. The 50 level. Didn't quite get there, but they took out the high of the day. Engulfment, sideways price action for the vertical, fast move back down. So each time we head into a session, again, we're in a consolidation. The market locked traders in at double zeros. They broke out, pulled back, took out the stops, consolidated underneath of the double zeros for the vertical move. So again, they came back down into the next 25 pip box, creeping trend down into the low. Whenever you see a creeping trend into the low, you got to be thinking that the low is getting locked in place. They break higher, creeping trend down again for the explosive move just after the New York Open. We can look at the British pound, and this is really simple. I come to the screen later. If I'm going to trade the pound, I'm probably going to be looking at London. If it's moved a lot in London, I might be looking in the gap, heading into the U.S. window, that sort of thing. But we're in a 25 pip consolidation. The market breaks out of that consolidation in the Asian session, proceeds just prior to our Europe window to put in a high of the day for Asia. This is our high of the day. Europe opens and trades down. London opens and trades lower to the low of the Asian session. So we broke out of the initial 25 pip consolidation box, but we've put in a new high of the day. And I said, if we break out of a box and they put in highs and lows of the day, and they trade away from those, you have to be thinking there's money up there. There's stop losses. There's traders who have pending orders for breakouts. The market. So if you were only working at the high or low of the day, the market came down into the low of the Asian session. Auction broke structure, auctioned back into it, came higher, pulled back into it. So when people say, well, where do you get in? Where do you get in? Come back to your timing window, understand when the equity market opens. London equity market opens at 3 a.m. New York Eastern Standard Time. They still have another week or two before they switch back. But if Europe puts in a low of the day and London or Europe puts in a high and London auctions lower, 1 push, 2 push, 3 push, and they break structure and engulf that whole lower structure into the low of the Asian session, we now are looking for our W form. We have a peak formation. We're looking for a W formation. We want to make sure we're buying down at the bottom. If our thesis is that this is the low and it's going back up, we broke out of the consolidation. They put in a higher high, which tells us they're possibly going higher. So we want to buy low in a market that's going to be moving higher. So right at the beginning of the day, we see this pair come to life and pop through the quarter level. Again, the British pound, 1 push, 2 push, 3 pushes, railroad track or engulfment for a creeping trend back down. So we know that now it's tried to go higher. It wasn't successful. When we head into the next session, we want to see what's transpired. We may potentially have a high of the day locked in at that quarter level. Put a line across. Right into the beginning of the session, again, we're in between 50 and 75. That's our consolidation. The market trades up, puts a high in place. I always talk about drawing your first high, first 15-minute high. Obviously, on the 1 minute, it pushes again. Third push to the high and engulfment. Engulfment right at the half-hour mark, and the market trades back down to the bottom of that consolidation. Breaks out briefly before pulling back, so obviously there's a decent 25 pip scalp here. Breaks down below that level, which again tells us, if people go along, that we may have stops, breakout orders below that level. So we've broken out. We may have the high of the day in place that traded up into the high and fell. It's broken down. We get our pump, 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 engulfment, pump, pump, above 50, peak formations above 50. They may be locking in a high above 50. So that consolidation box may now be shifting downwards. And again, we break down through the low of the day, pins down through the low, and we get a creeping trend down. So it's going to vary day to day on how these pairs trade. So we could look at the Canadian dollar. Typically, it's probably not a pair that's going to trade a lot in Asia, but we see an initial breakout of the 25 pip box early in Asia. They put a W in place and trade back up, put a high in place and trade back up to the high. Now, we don't go up to major round numbers. So when a market breaks through a quarter level, whether it's major round numbers or just a quarter level, and it fails to follow through to the next quarter level before putting in a peak formation, whether that's a low or a high, this can demonstrate to us a market that's potentially about to break down. So again, this pump and dump scenario for a measured move, we get our stops below. They break out of the consolidation. Obviously, we have a pump and dump possibility from the night before. So again, if you're not sure, look at the chart. Vertical, boom, pump, 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 trap volume. It hasn't gone any further. Trap volume all above 75. They break down, put in a higher low for the initial new day, or a low of the day, put back in a high of the day. Come back into consolidation. It starts to fall through the 25 pip box and breaks down where that original pump and dump began. Obviously fell a bit further. As we head into the U.S. session, we are now inside of a 25 and 50. The market trades up to the lower high of London. We can obviously see a lower high in the U.S. as well before engulfing, breaking down into the lower 25 pip box. So these peak formations above the quarter level, now obviously this is later in the session. The market sort of traded into consolidation afterwards, but it's heading into the next day. We see that the market is inside of that consolidation. Immediately breaks out of the consolidation. So again, the 25 pip box. It breaks out of the consolidation, puts in a higher low heading into the Asian window, and breaks outside of the upper consolidation, hitting stops, triggering breakout traders. So you'll see the master pattern when you zoom in on this. Our consolidation, we hit the stops, pull it back inside, and then we head into the next window. The next window goes down to the low of the day. So if low of the day has been locked in at double zeros, the market heads down in the Europe window. So coming back to some questions, like people are inside trading this action. Once the market breaks out to a level, that may be where the best trade setup is. So it's important to understand that you may not want to buy low, but you also may get the opportunity later to sell high. And so just look at these consolidations. Has the market gone into play? Is it moving? When we see this volatility reflected by breakouts, we know that this pair has now expanded the range and it's in play, and we form our thesis from that point. You might look at your other time frames, your daily charts, because this could be a sell setup today. So obviously I'm buying low. They're getting me to buy low, or this is going to be, this is a great 25 pip scalp, or this is the sell high opportunity that I'm looking for. If this is a sell high opportunity and you come into the U.S. session and they've broken into the next 25 pip box, you may be looking now for a peak formation sell high opportunity above double zeros for a move through 75 to 50. We can look at the NASDAQ, and I look at the NASDAQ in 100 pip increments. It can exceed those 100 pip boxes by 25 to 50 pips. I use the same process. The market breaks out in Asia. If it comes to life in Asia, we may have a sell high opportunity right off the bat for 25 to 50 pip scalp, either at the high or off major round numbers. The market trades back up outside before falling over in the Europe window, pulling back inside and dropping down through not only the low of the day, but outside of the 100 pip increment box. The reason why I like using these pairs with double zeros boxes is because obviously if you get a sell high or a buy low opportunity, you could be targeting 100 or more pips in these ranges. Some of these pairs, the Nasdaq has moved 800-900 pips. Same with oil. It can have massive days. So obviously when we break out and we put a new low in place and the market revisits that, like I may not even be here. I might just put an alert down here 25 pips away from the low or something, and if it goes off, I might come and say, okay, well, let's watch and see what happens here. Because with these pairs, obviously, again, your risk reward, you're targeting some big ranges. You might put two lots, two positions in where you take profit immediately on one, go to break even on the other, if your thesis is that this has the potential to trade back to the high of the day or further. So right off the bat, I want to know, has this pair come to life? If you don't see something spring to life right away, that doesn't necessarily mean that it's not going to be a great opportunity, because the day zero pairs may be consolidating because they're in a sideways consolidation for an explosive breakout. And again, that may, you may come to the screen in Europe and it's already broken out and recognize this, which tells you do not counter trend these moves. So just looking at gold, same sort of thing, 00 box, breaks out, pushes up to the 50 pip increment before reversing. So coming back later in London or the US, we now have a high of the day and we have a low of the day. This pair may trade off of 50s. It may be a 50 pip box that we start the day in. It breaks out and expands the range, consolidates back inside again before going up to the 00s for a sell high opportunity at the open of Europe. Expands the range on the downside, pulls back inside and revisits the low before locking it in and trading back up to the high of that consolidation. We get a breakout, false breakout, reversal right off the bat of the US window. So again, coming back to the master pattern, we want to see the range expand. We want to see these pairs come to life in Asia and give us possibly a sell high or a buy low opportunity, but also tells us if they're going higher. So if we buy low, we may be going back to the high for a measured move or a trend trade, or we may be in a trading range and the market is just going to trade back to the low and up to the high for a, 50, 100 pip move. Obviously, we had Fed on this particular day, so it's a little bit unusual. But again, there's our 25 pip consolidation. Gold takes off in Asia and goes higher. Great. Now we know we may potentially have an opportunity in the Europe-London window. Well, we're not at the high of the day, but the first hour, again, first hour usually puts in a high and a low. Puts in a low in, we have essentially a 50 pip box where they've broken out and then failed, and we're at the bottom of that 50 pip box at major round numbers at 00s. The initial breakout, pull back from Asia, and we get a buy low opportunity at the low of the day on top of major round numbers to retest the high of that range. The market breaks out of that consolidation again, which is a trade that I talked about the other day, the 3 pushes, peak formation, 25 pips above the range for the short 50 pip move back inside. They lock in the low. We know we have breakout traders up top with stops, short sellers up top with breakout traders. We're in the market. It retests that high and goes higher. We have a new high of the day. Market trades back up to it just prior to the U.S. window before pulling back and hitting stops back inside of the lower 50 pip box. So in this particular situation, we're in 100 pip increments, but 50 pip levels. And when we started the day, we were just in a nice tight 25 pip range. They broke down below 50 initially, potentially locked in a low of the day of the session for that first part of the day. They broke out above and pulled back. 1 push, 2 pushes, 3 pushes, engulfment, explosion for a move higher. So get really good at identifying pairs that are in play. They're moving, false breakouts, but again, expanding the range, pulling back can give you a thesis for a buy low or a sell high opportunity heading into the next window. So hopefully you got value from today's video, traders. Enjoy your weekend and come back fresh on Monday. and may the markets go
Hi
with you.
traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.